Hey guys, happy Monday. It's Johan again, and welcome back to another training session today. And I can't believe it's Monday and hope you've had a great weekend. And today we're going to talk about the subject of investing. And the great thing about this subject, guys, I'm going to make a three-part series starting today where I'm going to talk about the three main instruments that you can invest in and some emotional psychological tips that are required when you're investing in this current climate. Because as we know, guys, every time you turn on the news, maybe you could jump on the internet, YouTube, there's a lot of doom and gloom out there, but there is hope. And guys, this is only an educational video about what I'm doing for myself. Don't take it as personal financial advice. So if you've got some financial goals, reach out to a financial person within your state or country or local area and get some professional advice. This is for only educational purposes, nothing more and nothing less as well. So, and guys, before we get started, I want to thank everyone that's going to be tuning in on YouTube. So if you're watching this on YouTube, if you can actually like, subscribe and share this content with some family and friends. And also, guys, if you're looking at this on TikTok, give me a thumbs up as well. And more importantly, guys, thank you everyone who's tuned in onto Clubhouse today. And we are going to do a three-part series, but I'll talk about the next session, what we're going to talk about tomorrow. So guys, the three main instruments you can invest in is quite simple. You've got shares, real estate, and businesses. And I know there's all these crazy things out there like crypto and NFT and all that kind of stuff. But my philosophy is this: I'll only invest in things that provide a cash flow positive return after costs. So if something pays me a dividend, rental income after all costs are covered, or a business dividend interest from a private company, those are the only three things I'm going to be looking at. And the only reason why I'm focusing on these three things only at the moment is these things have been tested through the Great Depression, major depressions, corrections, even when the market's gone up. These are the only three instruments in our current time that have a 50, 60-year history. And, you know, if you look at the stock market, 30-year terms, or real estate and business interest and all like that, there's a lot of facts and figures out there to prove that over the long run, those three instruments will deliver a long-term return of positive XYZ versus, you know, crypto or NFTs that don't have a lot of history at the moment. So if you are investing, there are two things to look for. There's capital appreciation, which means you buy something for $1, it goes up at $2. Or you can get cash flow. So you might put $100 in something and you might get $1 a year for that investment. And I'm into the cash flow, guys. And I've got a philosophy in life. If it doesn't cash flow, just say no. And it's a simple philosophy. And if I stick to this framework, I'm basically not risking any investments. So like I said, guys, those are the three main instruments that I invest in. And my judgment, and I guess my theories behind it, is because they're the three businesses that provide real cash flow. And also, more importantly, they've been tested times again. And let's just do a quick pros and cons between those three little things, if it might help you out, just so you can get some more information. So number one, with shares, one of the positive things, anyway, in Australia, you can get dividends, which pay quite well. And that's something that I love. The cons is the price always fluctuate, but there's a way you can manage that expectation, which we'll talk about shortly. Then you've got property. Now, property can provide you with some great cash flow. At the moment, it is quite challenging, definitely across Australia. And more importantly, it does take a lot of capital outlay in order to get a return. And a lot of people just don't have that sort of cash at the moment. Private businesses can really, really do well if you're investing privately in businesses, but just be aware that 95% of businesses fail in the first year. And the honest truth is, the thing you've got to say to yourself is that, you're competing against venture capitalists or hedge funds who have a lot of analyses and all these kind of tools. And that's who you're competing against when you're investing in a private business. So you got to ask yourself, the real question is, am I buying this because I feel like it's right, or do I have factual information? And that's the thing you've got to really watch out, because I've seen a lot of people lose everything from investing in speculative businesses. So those are the three main instruments. The second part to this now is the psychological needs and emotional needs around investing. And there's a guy called Peter Thornhill who wrote a book called Motivated Money. I'm going to leave a link to his site, and I recommend that you read this book. and he explains one of the key things you need when you're investing, and that's to have strong mental, awareness, strength, and not to get caught up in the ups and downs of ebbs and flows when you're investing. So, and I think Jeff Bezos said something like, just because the share price goes up 20% doesn't make you 20% smarter. And also, if it goes down 20%, doesn't mean you're 20% dumber. And I think I've really, taken that thesis on board for the last 3 to 4 years, and it's helped me invest because I don't really look at my portfolio. I just keep investing. And as long as I get income, I'm quite happy again too. Now, the second part is you got to have a long-term view on this as well. So when you're investing, guys, you got to look at a 20 to 30 year horizon. A lot of people only look at a 1 or 2 or 3 or 4 year horizon. And just to give you an example, pre-COVID, the share market literally dropped 20 to 30% in most cases. And then we also had the opposite, which was true, where after 6 months, the stock market went up 30, 40, 50%. And a lot of people thought they were smart at investing. And, there was more YouTube channels about investing than ever before. Now, 1 year later, a lot of these people have vanished. And one of the reasons why is now that it's gone down, they feel dumb, they feel scared, they feel uneducated. But the real people who are investing now are starting to really pay attention in regards to various things. So it's very, very important that you have a long-term outlook when you're investing, guys, and don't look for the short term as well. And that's my second, one of my second things as well. The third thing is I highly recommend that you do a financial budget for you and your family. If you don't know or you don't have a budget, I'm going to leave a link at below. And I think in these crazy times, guys, it's just very important that you do prepare a family budget for yourself or for your family, just to ensure you know what your capital expenditure is, because there are going to be opportunities. Now, if I was just starting out in investing, what would I do? I'd seek some professional help. I always get help when I do my financial decisions. I might reach out to my accountant and all that kind of stuff. And I think that's something you should do as well. Like I said, this is not advice. This is just a bit of guidance as well. So that's the only training we're going to do today, guys. I wanted to keep it short, brief, and direct to contact as well. And tomorrow, guys, I'm going to do a small little episode around some, stats that are coming out, maybe some things to be really alert about when we are investing. And I hope it provides you with a bit more education as well. And guys, if you want any coaching around that sales and mindset space, please drop me a comment or, please email me freely and see if we can help you out in your next decision. So guys, checking off on Clubhouse, checking off on TikTok, checking off on YouTube. Thank you again. Have an amazing week, guys, and speak to you soon. Bye.